here's a problem that's asking us to compute the ARR for the investment. It says Blue Mountain Hardware is adding a new product line that will require an investment of $1,450,000. Managers estimate that this investment will have a 10-year life and generate net cash flows of $305,000 for the first year, $290,000 for the second, and $255,000 each year thereafter for 8 years. The investment has no residual value. It says compute the payback period, which we've already done in a previous video, so feel free to go back and review that if you'd like. It's under payback period for uneven cash flows. And right now what we're going to do is compute the ARR for the investment. So let's fill in the information that we're given. So we know year one inflow of cash will be $305,000. Year two is $290,000. And this is all given to us. And year three is $255,000. And that's years 3 through, or for the next 8 years, I guess I should say. So if we would add all those up, what you end up with total cash inflows is $2,635,000. Now remember, with ARR, it's based on accrual accounting income. So we have to subtract out the depreciation. Oh, so we'll have to calculate what that might be. So it's, if you recall from your financial accounting class, cost minus residual over useful life is the formula. Now in this particular problem, we have no residual, right? It's a 10-year life and generates net cash flows. There's no residual, it says right there. So we would subtract nothing in effect. And the useful life is 10 years. So it's going to be $145,000 each year in depreciation. Times 10 years will get us back to our $1,450,000. So all of the cost of the asset will be depreciation in this particular example. So that will bring us to total operating income of $1,185,000, which is the cash flow minus the $1,450,000 depreciation. So if we had, again, 10-year useful life, that means the average annual operating income is $118,500. Now we're not quite done here yet because we still need to calculate that the accounting rate of return. So if we go to, just gonna flip to the slide that has the formula on it, average annual operating income from the asset divided by the initial investment. Well, we just calculated the $118,500. Go ahead and divide that by the initial investment, and that gives us an ARR of 8.2%.